Good morning, all. Camelback Trading 2724 coming to you this Tuesday morning, April 28th. We're looking at the market profile of the SPY ETF here on Window Trader. And as you can see, another gap, 2 days in a row higher. 2 days in a row, price probe being accepted. Some will call this emotional trading. I find it hard to believe machines have any emotion at all, so I call it mindless machine trading. However, no matter what we think of what's going on, yes, price is only an advertisement, but the more it goes up, the more it gets accepted. We have to deal with it. If I came in biased, right, here's Friday afternoon when I thought this run-up was something that was just price going higher. Well, look at Monday. Gap higher, held the gap. Here's Tuesday. We're gapping higher. So we have to trade what's in front of us. Couple of questions on price spikes, price probes. I'm going to go over those real quick. A price probe can only happen in the last half hour because we don't know if it's accepted or rejected till the next day. Yesterday is a perfect example. The price probe is L's high of 287.90. We closed at 287.05, 85 cents lower than the probe. However, look where we are today. As long as we open above L's high, it is accepted. Price spike, Friday. So, again, it's kind of my own definition of it. It's not by the book, but this is what I go by, and it helps me. If we make a new high in J, K, or L, like we did on Friday, where J took out I's high, if we close above I's high, that's where we spiked from. So, I'm using that, again, just like I used L's high on Friday. I'm using I's high as another visual point where there were buyers. Yesterday, we also spiked when K took out G's high. However, we closed below it. So to me, that price spike was rejected. If it was that strong, we should have closed above where we spiked above. So that's the difference between the price spikes and the price probes. Okay. Let's go over destinations and a game plan. So right now, with just over an hour to go, we're not going to use yesterday's high since we're over $2 above it. So our first destination on the upside, I'm still going to use that weekly high of 288.52, even though we're $2 above that, because we have to then fill a gap at 290.23, 171 point gap for March 9th. Now, right now we're trading at 290.60, so the bulls are accomplishing that. Above that, we have nothing. We always talk about price vacuums, price voids, and how when you're dealing with short-term trading, which we are, and how do I know that? The volume is horrendous. 80-something million on Friday, 70-something million on yesterday. Yes, it's only one part of the equation, but you can't ignore it because at some point it's showing you that higher prices are cutting off volume. Our average volume is now down to 142 million. So we keep lowering that, but we can't even get close to getting to it, even on these moves up. It is absolutely short-term buyers, and they have to seek their level. Price needs to seek its level. Now, above this, we don't have anything to 295.07, and that's not even a huge reference point. That was only 9 wide from March 6th. And then above that, the next major one we have right now is 298.78. $8 higher from where we are. That's a daily high, and then filling a gap at 300.01, 123-point gap, and that would put us around the 200-day moving average. So unless the bears start getting busy, price is just going to continue to seek its level on the upside. For the downside, now our pre-market high right now also is 291.08. So right now, that would be your first destination on the upside, 291.08. Above that weekly high, and then once we fill that gap. For the downside, first destination is 288.27, which is yesterday's high. Then the pre-market low of 287. No, I apologize. Then we have 287.90, the price probe. So our pre-market low is below all this. 287.90 is the price probe, then 287.50, my pre-market low, and then that afternoon pullback low, 286.10. And I'm just going to stop there. That was a perfect entry point. And look what we did the rest of the day and now this morning. So what is the game plan? Again, I didn't trade to C period yesterday. Do I want to buy a gap? Yeah, everything is context. Everybody says, "Oh, gap rules, you go with the gap." Well, I don't go by that mantra when the gap is over $2 higher from where we close, $2.50 higher. I'm sorry, from the high, not the close. Again, yes, there's nothing above us, but that doesn't mean the market can't have some kind of inventory adjustment. Just like yesterday we had it. I didn't take advantage of it. It wasn't much of one. We went back and forth through the opening, came down, tapered off, and then once we got above that opening, I should have been long. So that's the same thing what I would look for today. If we're to have an inventory adjustment, back and forth through the opening, taper off, then I would get long because my risk is a lot less because I'm out at the gap fill. So I'm not a buyer here. I would like some kind of inventory adjustment with tapered volume and hold the gap to get long. Am I a seller here? No. Now, in the next hour, if we're to open a little lower and hold part of that gap at 290.23, well, then if we're to gap higher, but not fill that gap from March 9th, then possibly I would take a put play to see if we get an inventory adjustment because that gap held from March 9th. Again, these are things that are going to get closer to fruition, for lack of a better word, as we get closer to 9:30. Anybody in the Camelback trading room, voice room, will get all that firsthand between 9:15 and 9:30. So that is a very limited game plan because we need more market-generated information. Now, let's go to the charts. Monthly, including today, 3 days left to go in the month. Inside month, right now, I mean, again, a lot could happen in 3 days, but the higher we go and the closer we keep maybe finishing at the top of this inside month, it's going to give the bulls that much. They're going to get emboldened more and more because then their thought is, well, we have to come out of an inside month to the upside, just like they did with the inside week yesterday. Plus now, they're getting firmly above that trend line from 11 years ago. Yes, we went below it last month. Yes, we went below it this month. But 2 months out of 11 years is nothing if we close above it. Weekly. So, yesterday I couldn't show it to you because my sneeze knocked out the weekly chart. So, 287 level. It's been incredibly critical. We closed at 287.05 yesterday. Coincidence? I think not. I don't believe in coincidences. Now, does 1 week make a market? No, it does not. However, it's certainly a feather in the bull's cap that we're out of an inside week. Last week's high is 286.79. We're about $4 above it right now. So bulls are certainly taking control. They're trying to fill that gap I'm talking about. And then here is the void. There's nothing. There's really nothing going higher as of right now. So, again, distance is the key, right? They're one time framing up 5 weeks, no distance last week. Now they're starting to get distance again. So whatever we think about where this market should be means nothing compared to what the market-generated information is telling us. Same on the daily. 11-day balance. Came out of it on a gap yesterday. Yes, we closed inside of it, but I still said I'm going to give the bulls their due and call it balance to up, not just balance. Well, right now we're gapping higher. If we're to hold the gap and certainly stay above that 287.30 level after today, it's firmly up with the gaps being my main focus. Good luck trading today. Have a great day. Check us out at camelbacktrading.org, and I'll recap at 4 p.m.